Hello and welcome to the home of high probability trading. My name is Tim and I am one of the traders here at the live trade room. And what we're looking to do is to trade the US Open, fully live and interactive for you with real capital. So just before we begin, if you are genuinely interested in learning how to trade the financial markets, we can certainly help you as an organization. So we have an awful lot of products and services available to support our traders, whether you have 20-30 minutes available every evening or whether you're looking to trade during the day. So we do cater for full-time and part-time traders. The reason for that is largely the process of trading is very much the same. You're just perhaps looking at slightly different time frames. Okay, so over the next hour or so, you'll see us prepare for the trading session when the cash open kicks in at 1 p.m. UK time. You'll see how we identify the opportunities. There's a couple of really good opportunities looking like they're setting up across the board, so we can explain them, we can plan and prepare for them, and we'll put our trade plan up on screen for you so you can track the performance of those markets. And we've had some good moves from yesterday's levels. And the other thing to just mention just before I begin is that we're looking for high probability trade across not just foreign exchange markets, but also the commodities like crude oil and gold, and the global indices markets as well. So we're looking at the S&P, the DAX, the Dow Jones, European markets like the FTSE and the DAX, and the Asian markets like the Nikkei. So it is important for us. We do understand what's going on a multi-asset class basis, and that can give us certain edges and gives us a better understanding in terms of why markets move the way that they do. Okay, so let's start then with our risk warning and see if we could make some cash for the session. So please see our risk warning currently up on screen. Of course, it's incumbent upon us to make sure that you are mindful of the risks involved in trading these financial markets. It is from that appreciation of risk which allows us to be consistently profitable, and it is largely the same for all profitable traders. They've got I suppose an educated view on risk management. They've probably seen or experienced the downside of poor risk management, and they then put, I suppose, very simple almost rules in place in order to kind of offset the very significant downside that most or a lot of traders do experience in these markets at some point. For us, we are acutely aware of our need to actually calculate trade size effectively, so you know exactly how much capital you're committing to each trade, and that's a fundamental building block for risk management. Okay, so without further ado, I just want to share with you briefly before we begin some of the news events for the trading session. So today's Thursday, the 15th of April. If we just go back a little bit, we had a very positive number as far as the crude oil inventories numbers concerned. We're expecting minus 2.4 million barrels. We saw a figure of minus 5.9. So what that's likely to do is impact demand. If demand increases, then we can anticipate the price of crude oil also increasing. Very much in line with economies coming back online, and it's having a positive impact on the oil markets. So overnight, we've experienced employment numbers coming out of Australia, and there is a sort of a broad positive sentiment behind these markets across, certainly your G7. Where there is a very significant uptick in figures like unemployment, retail sales, which is what we've got for the US now at lunchtime. So we currently have some high probability trades in play. They're currently pulling back and are actually giving some decent opportunities at current prices. So we get in and we'll have a look at those straight away. We've got manufacturing index due out, the Philly Fed at 1:30 as well. So an important event really around 1:30 today. So that's in about an hour's time. So we'll get ready for that. and not an awful lot to close out the week with, to be fair. We do have a very interesting GDP number coming out of China, so they've been leading the way in terms of the bounce back from the coronavirus. They got control of the virus a lot earlier, and they were far more disciplined and precise with the way that the authorities responded to the coronavirus. Obviously, they've been through other similar type viruses like SARS, so they've got a bit of experience in this boat. But what we're seeing is a very, very significant uptick in GDP. So it's a crude measurement of growth, and you can see how it just overshadows the last 20 years. So it would be a really, really important figure for global growth if we see figures up at these levels. So, and that's only really positive for your equity markets. It's only really positive for that risk-on correlated markets. So we can expect further dollar weakness. So that's the news that we'll keep an eye out for. Let's get up our trading platform. So yesterday we were looking at the S&P above the 4150, and we keep getting quite close to it, so we can continue to look at this level. We've had a significant pullback in the Nasdaq off the highs from yesterday, so we were looking for this market to pull back and around the 4,000 level, but you can see it pulled back quite sharply, and it actually kept going until we sort of just bounced off these lows, and now we're just building that consensus back to the upside. So we'll have a look at the Nasdaq in just a moment. Crude oil, we like it above that. Well, we were looking for a buy trade, a high probability buy trade above the 61.80. We're now up at the $63 level, and the next level of interest to us is above the daily high, and we were at that level for a period shortly, so we'll come back to crude oil. Now the big moves have occurred in the dollar pairs, so we've been talking about dollar weakness now for a couple of days, and that's exactly where the opportunities potentially lie. So the Aussie dollar is probably a good one. So we've had a really strong move above that 76.64 level, which is the level we were talking about for a while. We didn't really get that opportunity for the pullback. They were really quite shallow, and then they kicked on to the next level to the upside. So currently just pulling back off the highs. Would expect some buying to come in around these current levels. So in and around this type of zone in here, we could probably expect a little bit of support coming in. So have a look at this on a daily time frame. You can see the uptick in this market, the sort of the bullish aspect to it. So what's happened is yesterday we cleared out the 76.64, which is this level here. 76.64 really exploded to the upside. We've broken above the monthly high, and sorry, the 50 period moving average, should I say. We've cleared above that. We've pushed on to the upside, and now we're pulling back to previous highs. So that's kind of what you often see. Now we do expect further upside on this, so it is a pullback opportunity to get into this trade to the upside. And as you can see, we have our stop loss beneath the low. So we'll go and have a look at across the board really at these dollar pairs just to see where they are. The euro dollar is just running into this really strong level of resistance, and we're now back at the 50 period moving average. So it'll be interesting to just monitor the euro dollar. We are going into quite positive retail sales figures, so that would be a positive event for the US dollar potentially. Now, if the equity markets continue that move to the upside off the back of positive earnings, so there's an awful lot of positivity. then we can expect that the dollar to continue to weaken. Okay, pound dollar, it's just in this indecisive moment. As you can see, the dollar yen, if we look at it on the daily time frame, it's really just, there's very little volatility in the dollar yen. It's just continuing to grind further to the downside. The dollar Swiss, we've bounced off the 50 period moving average, which is, it's why this level is quite important on the across these markets, especially when you're trading daily time frames. So the dollar Swiss is finding some support in at this level, and probably a bit of short-term positivity. Really, we'll see. We want to keep focused on the potential for dollar weakness, because that's where the trade potentially is right now. So we're in this market to the downside as well. If I bring up just change the volume tab down here, you can see our entry and our stop loss. The thing is about our dollar CAD sell trade and our Aussie dollar buy trade is that the stop loss is below the daily low, and that's quite important for these two trades. So we've made that move to the upside. We're currently experiencing a bit of a pullback, and now we're looking for that next leg to the upside. So when we get some cash coming in at 1 o'clock, we'll see if that's the case. The New Zealand dollar is just rolling over a little bit, just pulling back to the 50 period moving average. So so the dollar is an interesting opportunity for us at the moment. The euro pound, so we've got a bit of indecisive price action here for the euro pound. So we'll the kind of sideways moving pattern. I'm just going to turn on the squawk that we have, just to get a bit of insight, perhaps going into this, really quite important retail sales figures. We're likely to see some positivity in that figure. A lot of the indicators and the smaller sort of news data points are all, broadly speaking, quite positive, from manufacturing to unemployment to, so there's this gradual kind of positivity about these markets. So we're in this 2-week or 3-week nearly sideways moving price action in the euro yen, so it doesn't really give us fantastic opportunity just yet. We don't really like to trade the range in and out of these inside these daily highs and lows. We want to see some breakouts and some pullback opportunities. The gold is just pretty much up and down, if you can see. I mean, just compare and contrast the vast majority these days. Good afternoon, Finbar. Hope you're well. You're absolutely right. It's a lovely day at the moment, so we're blessed. So we have this double bottom, and 3 days ago prices attempted to push lower and then kind of reverse. So we'd like this market breaking above 1760 level is the level to look out for gold. Crude oil, it's attempting to make that little move to the upside, at which point we would be quite interested. It's really just trading inside this little zone in here. There we go. So we're just drifting sideways, and we have been for, I suppose, since yesterday's crude oil inventories numbers pushing prices higher. We're just drifting sideways. Are you in any trades at the moment, Finbar? do let us know. So the S&P, it's only just like, this is the 150 level, sorry, the 4150 level, which is really quite important. We had a little bit of a retracement yesterday, followed by some more buying coming in. So we're up at these highs. We'd expect prices to actually continue further to the upside at some point when they want to get round to it. Okay, so that gives it a little bit of structure there. We can put the all-time highs just above the 41.53, so really closed to really kind of struggled to actually stay above that 41.50 level, which is why we like these levels, because they do act as support and resistance. And you can see what when we look to get into trades, just to explain our thinking, we want to be as consistent as we can, and we want to be quite disciplined with our decision making. And if you just look at this first candlestick here, you know, we've got a really confirmed break of this level, the 41.48. Prices tick to the upside, and then you're looking for the follow through. Do we get the follow through? No, we don't. And then prices roll over, and you get a bit of sort of upside, and you think, all right, fantastic, we've now made a new all-time high, and then prices reverse back down to this level. And then in the next 15-minute candlestick, the same thing happens. It pushes right the way up, and it fails to get above this level, and it comes all the way back, and then starts to sell off again. So at that point, there's no clearly defined opportunity. In fact, it's a structural failure back to the downside. So that's how you can navigate those types of opportunities. So it just meant we were unable really to get into the trade yesterday, and it looks like we're attempting to kind of push to those levels again today, and we're only sort of we're probably 6 points off all-time highs again, so practically nothing there for the S&P. It's a similar discussion really. So prices are just ticking to the upside. We'll see if we get kind of retest at this level, and then if we kick on to the upside. So we'll just sort of play this as we see it almost. Yeah, so the FTSE is kind of looking very close on the monthly to actually breaking this level. So it's been really rubbish price action since last March. There's been and I suppose more recently in the last 4 months, it's kind of been uninspiring, let's say. It's kind of grinding, but we're seeing a fair bit of gapping to the upside and to the downside. The DAX is just in this little sideways zone, and the yen as well. Oh, I see, Finbar. So you're in the dollar CAD trade. I assume that's a sell trade. So yeah, we're just currently pulling back off those lows. So with these retail sales figures coming out shortly, we'll see how these markets react. But without doubt, the trend is definitely to the downside, and we might have to put up with a little bit of sort of further sideways moving price action, but the momentum is very much lower. Yeah, the Aussie Swiss trade, Do I have it on here? Yeah, the Aussie Swiss. So that's a good trade. Yeah. So yeah, a good trade. Excuse me. So we've got this 4-day low in here, and then prices, start to turn around and start pushing to the upside. So we've clearly broken through this level. So you would anticipate further upside from these levels. And if prices break above the 72.19, then you're really off to the upside. So we can keep an eye on that, Finbar, definitely. Yeah, so the dollar CAD short. Splunk. Not too sure what that is. We've had some traders recently refer to some markets in some very funny ways, and is that a misspelling, or is there a market called Splunk? Michael, good to have you with us. Hello to you. You're very welcome. We're currently in the process of just putting together our trade plan for the trading session. We have the cash open now in 15 minutes. So we were just going through every night at 9 o'clock. We do our trade plan webinar. So we look so we have a portfolio of opportunities that we can focus on in today's trading session. And last night it was really all about the dollar weakness. And quite a few of them are kind of currently in the middle of pulling back. So we identified the euro dollar above this level in here, above the 1988 level. That you can see prices just literally bounced off that level today. So will we reattack it? And if so, then there's a good decent buy trade there in the euro dollar. Yeah, further downside in the dollar yen, and just very quickly, we're in the CAD to the downside, currently pulling back. This is a decent selling opportunity. It's just we do have the retail sales figures, which are due out now in kind of half an hour, 40 minutes. So we're so close to that event, it's really not worth getting into it now at this point. Yeah, so we're currently trading the dollar CAD to the downside with a stop loss above today's daily high. So we look for these sort of psychological shifts in these markets, and we're technical traders, but we want to understand the market fundamentals when we get into a trade. So it's like the wind behind our trading. So we're in a risk-on market condition, firstly, which is likely to put the dollar under a bit of pressure. We've got this low, or let's say the bond yields are softening somewhat. You may have heard an awful lot about that in the news recently. So we're in this sort of softening yield environment. We were a couple of weeks ago, we were up at 175, and now we're down at 1.61. So that's taking a little bit of pressure out of the system. So there is this focus on risk on, which means there's the flow of capital is moving in towards the equity space, and it's then a case about cherry picking the opportunities accordingly. And if the indices are pushing higher, then it puts it's negatively correlated with the US dollar. So the opportunity for us is for dollar weakness, and we're trading it against the CAD for a couple of reasons. Firstly, there is a structural failure to the downside. This is when all of these traders at that point, all of these buyers that are looking to push prices to the upside whenever they get opportunities, that's the important psychological point at which normally, not all the time, you can get false breakouts, of course, but that's normally when we'll see a build-up of stop losses at these levels, and you'll get a little bit of follow through to the downside. So that's what we're looking to trade. It's the market condition that we're trading. The other one is the Aussie dollar to the upside. So we were looking to get in at the 76.64 yesterday, during yesterday's session as well. I know a few of you were able to get into that, which is great. So really good trade off the back of yesterday and the majority today. And all we're really doing is pulling back to close to today's highs. So we're above the 50-period moving average. So really, we've got all the things aligned to a certain degree. And now we'll see if we get some follow through on those trades. But like I said, we wouldn't expect much price action between now and 1:30 with the retail sales figures due out. Sorry, I was just putting on our Squawk, so we'll get some live news updates. So I'll just turn that up a little bit. So to answer your question there, Michael, we're selling the US dollar. Basically, we're looking for opportunities to sell the US dollar, and we're also keeping a very close eye on the US indice markets. So we're extending this little move. We're just breaking up to this level now, the 41. We're at the 41.50. Look how prices reacted previously at these levels. So we would fully anticipate these markets to benefit from really important retail sales figures, which are due out now in about half an hour. It's these core retail sales figures. We also have some manufacturing data and unemployment claims. So potentially some positivity for the US indices in the pipeline, which is kind of what this is reacting to in advance of that news event. So let's just see. I mean, there's no point getting in between 150 and 153. We just want to see how prices behave around these levels. Can I ask, Michael, have you got some experience trading markets? Have you traded before, or are you very new to trading? Let us know, and if so, are you in any trades yourself, perhaps? Okay, so let's put our trade plan together then. Yeah, so you're fairly new to trading. Yeah, you're still learning. Look, that's fine. Hopefully we can help. We're live here actually through our YouTube channel every Monday to Thursday at 12 noon. So you're very welcome to join us. We don't have this session on Fridays at the moment because we have other trade coaching sessions, but then we will be going live on Fridays in a month or so. So you're very welcome to join us here, and if we can help you or assist you, and if you've got questions about trading these markets, do let us know and we'll help you as much as we can. So let's get this trade plan together then. So we absolutely want to monitor so this might just get a little bit just while we organize the markets we're looking for. We just want to keep an eye on the all-time high and just see how price interacts with the S&P 500. We'd also like to look at the Dow Jones. They're likely to be a net beneficiary of this news event as well. We've had a little bit of softening. We're just coming up to Yeah, this is the Dow Jones, so we bring this level. So that's an all-time high, just up at these highs, and we're very much at those levels as we speak. So we've been looking for equity strength, and we're continuing to see that opportunity unfold. And the equity market's pushing.
This from Reuters earlier in the session began to repeat and further reports the US banning banks from buying new Russian sovereign debt from June 14th.
And like I said, the equity market's pushing higher. There's a lot of positivity around these indice markets, a lot of positive sentiment, and it's going to put the dollar under a little bit of pressure. But we are just now looking to trade that news event at 1:30, so we'll see how prices react to that event. But it's certainly likely to be very, very positive for these indice markets. I just want to compare and contrast actually the Dow Jones to the Nasdaq. So there's a little bit more value really in the Nasdaq. So let's look to focus on that one just for now. Sorry, I did say the Nasdaq, didn't I, rather than the Dow Jones. So it's just really a process of identifying what are the higher probability trades and looking to get into those opportunities accordingly. Yeah, so you're starting to understand how to identify the different indicators, but I'd like to get a better grasp of it. By indicators, do you mean sort of trading indicators like moving averages and RSIs and all these types of indicators, Fibonacci and things like that? Is that what you mean by indicators? Or you mean you look for, I suppose, the reasons why markets move the way that they do and looking to get the fundamentals in line? Because there is an over-reliance on actually the use of indicators, and I mean there's a number of reasons why most traders really struggle to make any money at all out of markets. In fact, you know, there's a reason why these financial brokerages are, you know, seeing, you know, 500, 600, 700% growth over the last 12 months. It's purely down to the fact that traders burn their trading accounts, and just largely purely because they don't really know and understand what they're doing. So you're absolutely right to be on that sort of quest to be learning, you know, how these markets move and look to trade with a high degree of knowledge and understanding rather than just guessing. But for us, there's a few indicators on the screen, but we don't really work with them to any great extent. So I'll explain now in just a second. So look, we want to just monitor. There's a few of these dollar pairs that I would like to keep an eye on, and the first one is the euro dollar, just to see how price behaves around these levels. The dollar yen, are we getting much movement to the downside? Doesn't look like we are just yet. So we can have a look at these on the daily time frames. What I will do is, let me get rid of a few of these because all these purple levels are just they're intraday levels, so they don't have any major importance as far as the monthly time frame or the daily time frames are concerned. So we are monitoring the 1988 in the euro dollar to the upside. We can keep a little bit of an eye out now. Sorry, this is a little bit on the fiddly side. So the dollar CAD, so it's really been a little bit more of a focus on the commodity currencies. You know, we've seen some decent moves from them. That's the dollar CAD. We'll have a look at the Aussie dollar as well. This is quite cluttered, so we'll keep the daily high, but we'll get rid of some of the others. Okay, so we're just sort of tidying this up just a little bit. Probably got these coordinated a little bit. Okay. What I'm going to do is I'm going to put these into squares because they're much easier to work with.
Some crypto news here. StockGen announced they have issued the first structured product as a security token directly registered on the Tezos public blockchain.
Just messing around with these charts. We're not likely to get any tradable opportunities until this news event occurs. So certainly we wouldn't be committing capital now at this stage.
It's officially announcing the US issuing sanctions on Russia.
So issues between Russia and the US seem to be gathering a little bit of pace now at the moment, which is obviously not great for anybody really, but
It's officially President Biden signing the new sanctions executive order on Russia.
So we're very close to this all-time high. We're getting a little bit of an uptick, but we'll see how these markets perform around this news event in just a moment. And we'll keep an eye on the euro dollar potentially to the upside, certainly above that 1988 level. Further downside for the dollar yen.
Earlier reported from Reuters and Bloomberg US prohibiting transaction in some Russian debt.
And then the US dollar against the commodity currencies. So we're getting further downside in the dollar CAD, and we'd expect more downside as well with the Aussie dollar as well to the upside. Oh, okay, Michael. So, for example, how to read a chart and see if it still will be on an uptrend, or if a reversal is likely to occur. Yeah, that's pure price action. It's kind of pretty much kind of what we teach traders, how to identify the opportunities, and looking at the bigger time frame is something that really helps. So you could have a look at something like
as they announced the US sanctions on Russia with sweeping new sanctions authority. Well, they are.
We might come back to the squawk in just a moment, but yeah, understanding how to read charts. So I've often used the analogy of trading for us is like reading a book, where you're actually able to identify and understand what you're reading. And then you get to the stage where you can actually have a decent opportunity at predicting what's likely to happen next. So with the way that the story is unfolding, you can stack the odds in your favor to sort of work with probabilities to suggest, right, well, this is now likely to happen next, and that's developing a trading idea. So you're either risk on, you're risk off, you're either pro crude oil, or you think for whatever reason the dollar might strengthen or weaken. All of these are trading ideas, and once you have that basic understanding and you can read what's going on in these charts, you can then plan accordingly for those opportunities. So a good example is the euro dollar, clearly to the downside. We have these 50 period, 100 period, and 200 period moving averages, largely for the daily time frame. They're quite useful. So we're currently trading around a 50 daily moving average, and you can see that this is a triple top here. This is an important level of support and resistance, and it coincides with the 120, the psychological level. So apologies if I'm sort of bouncing around a little bit, but what you can see from the monthly time frame, and we do analysis, we do multi-time frame analysis, so we want to understand where we at on the bigger picture views. And we've been in a downtrend since the financial crisis, so the dollar has ultimately strengthened. Now we've had long periods of corrective moves, of course, but broadly speaking, the bias has been moving to the downside, until we kind of end up making this triple bottom down at these levels, and prices start to push back to the upside. So there's lots of traders that will be looking to sell these opportunities, and they'd be able to do so. So the market made a really exerted move to continue down to these levels, but ultimately failed to make a new low. And now we're in a situation where prices are pushing upwards. We're currently in this little pullback phase, but now a breakout. We've already broken outside the descending level in here, and so this is when we stop looking for the selling opportunities, and now we're actually anticipating this market to push higher. So that's what we spend our time doing. And a break above this 120 level, or in this case on a monthly time frame, the 123, is a really important structural failure to the upside. So when we remove all of this and we look at it on the daily time frame, we can see the 123 up here. The price has already bounced off it, and we've got some price action on the smaller time frames to work with now, and our bias, as I've just explained, is broadly speaking for dollar weakness now, and we're looking for those buying opportunities to kick in. If you were with us 2 days ago, you would have heard the 1919. That's our high probability buy trade for the euro dollar. We've pushed above the 50 period moving average, and the next hurdle to the upside is above the 120, or in this case the 119.88. So only 12 pips off the 120 level, and that's an important psychological level. And it's actually so important, I'm going to actually put this level just in here, and I'll we do all important levels we do mark slightly differently. So you can see if it's an all-time high or it's a major level like the 120. The reason why we know the 120 is so important is because the ECB keep making references to it. So that's precisely the 120 level, and this is now. So if you're looking for a high probability trade to the upside, we're waiting for that price to reverse, but there is your next leg to the upside. So we've had only a very brief kind of pullback, so it could actually do with a little bit of a corrective move now at this stage to get that move. But the fundamentals behind a weakening dollar are actually quite strong. So will we get that corrective move, that strong pullback? Probably not. It only happened, the breakout only happened 2 days ago. So we shall see. But like we put this together every day in our trade plan webinars. So you pretty much find a pattern that lets me take a more educated guess. Okay, I used the wrong word for it then. Yeah, thanks for the clarification. Yeah, listen, wording and terminology is always very, very important in these markets. So yeah, no problem at all. Yeah, finding patterns. I suppose the indice markets is probably the best place to, and I'm just conscious of the time, so I'm looking at some charts off screen as well. So we will be ready for this news event at 1:30. So we've got a little bit of time now, but the point I was going to make was, and the indice market is probably the best place to make this point. So it's probably fair to say we are firmly in a bull trend. So broadly speaking, we're looking for buying opportunities in markets like the S&P, and this is your sort of concerted breakout to the upside. This is on a daily time frame. This is your S&P 500. But what we have with this market is the fundamentals behind this market are really, really positive. And what we mean by that is central banks have injected unbelievable amounts of capital into these markets for the last 12, 13 years. The first crash is called quantitative easing and bond buying programs. The Fed have been involved in that for a long, long time. There's been a more recent round of quantitative easing and bond buying as a result of COVID. What the central banks have been able to do is to get the treasury departments involved in spending as well. So instead of we had a credit crunch in 2008, and what that meant was we were in the world of austerity. So governments and treasuries had to taper their spending, so there was lots of cuts. The impact that has on society is pretty profound, and because often those that are the weakest in society pay the biggest price, i.e. they don't have the lobbying and the infrastructure in place to fight their battles. So from a society perspective, it's a very, very poor option. Yes, you have to balance the books, but that's now shifted completely to an environment where actually they want to encourage more spending. And if you spend more, the prices for things are likely to go up. You create this inflation environment, and you're likely to see what we're seeing with all the spending and all the low interest rates as well. That's another very important monetary policy measure. What that creates is it makes the stock markets a lot more attractive. So you get that flood of capital. We always talk about where is the capital going, because that's where we want to be. We want to be following. So we don't have like a head down approach of the euro dollar and just want to look for technical opportunities in the euro dollar. We want to go wherever the market capital is moving, and it might move from the indices markets, it might move into commodities, it might move into the dollar, for example. It might move to the yen in the form of a safe haven on a Swiss franc. So it all depends what happens globally, and it's never really about what we think will happen. It's really about where is the money going, and what is the conviction of others, i.e. your major hedge funds, your big institutions, your big investors. You know, what are they doing with their money? Because we can see it on a chart, you see. That's the beauty of it. So they'll have access to all the data, which we'll never have access to, but we will monitor the headlines. We will make sure that at least we've got the wind behind our backs when we trade. And then it's about technically entering and exiting those trades. And the more consistent and disciplined you are, the more consistent you are with your decision making, and the more disciplined you are with your capital, most importantly, and you put a bit of patience in there as well into the mix, all of a sudden you have the framework in which to be consistently profitable. So with the US indices markets, the fundamentals are very, very positive at the moment, and as a result you're seeing a lot of positivity in sentiment. So across the media channels, you know, there's lots of interviews about, you know, we're likely to get prices pushing higher, things are looking really good, the figures are looking good, blah blah blah. So all of that stacks up, and then you can look at these charts and say, right, well, prices are clearly moving to the upside. What we need to be as traders is clearly looking for buying opportunities in a market like this, just by doing this sort of basic analysis. And at any particular market in time, you can buy, sell, or do nothing. And if you can be sure, doing your analysis and being able to look at the markets like this, if you know you've got the fundamentals, the sentiment, and the technicals are all on side, it makes your decision making a lot easier. You're discounting 66% of the options, and you're focusing on the 33% as a result of your analysis, and you're not double guessing yourself. You know, so for us, we're just looking for buying opportunities in the S&P, and that 4150 or the 4153 is our level at which we get interested. Now these markets are pushing higher, as I can see, as we go into this news event now in sort of 13-14 minutes. But look, trading is like any other sort of skill. It just requires a little bit of work. You obviously need to access the education from the right people. That's a big problem. With so much free content out there and YouTube videos, the vast majority of it is a complete load of nonsense. So just be careful, obviously, where you get your education from. And of course, that's what we do as an organization as well, the Live Trade Room. You know, do feel free to go to our website, Michael, if we can help you. You know, you can trade with us for a whole year for as little as just $15 a month. So, you know, we trade the markets with live capital every day. So it's we've made the decision not to charge people like yourself who are genuinely interested in learning how to trade, you know, a lot of money to actually get daily experience and be mentored on a daily basis. Now, we just run this session free through our YouTube channel every day for an hour. So there's plenty more. We have our signal service, we have our evening webinars, we have our trade plan session every night at 9 o'clock for 30 minutes. So then when we hit our trading desk the following morning, we are ready to go. So if we can help, we will do. Yeah, Finbar, you're stuck in a rut. Yeah, there's no doubt about it. Trading is a little bit more challenging, and the biggest problem we're finding at the moment is the times at which these markets move. You can get really nice explosive moves at sort of 5-6 o'clock of an evening, and that's not great. Certainly from a personal perspective, with family and 3 kids, it's not the most appropriate time. So yeah, it's the timing of the moves that are not great, and certainly a lot of these trades are moving as well during the Asian session. So you've kind of got to weigh that up, and what we used to use quite often was pending orders on our intraday trades, and we'll be reverting back to using them. So we avoided using them there for a little while because the volatility was so erratic. But now there's a bit of clarity back, and I mean, I know you know very well, but it's really all about that ability to manage risk, to be consistent, and this is why we spend an awful lot of time with our traders talking about consistency in your decision making, because if it's erratic, if you're throwing caution to the wind, and if you're not doing, I suppose, if you're not going through the process accurately enough, or you're not paying attention to what's happening, it can be a challenging and a difficult environment. And this is why, obviously, when we create our trade plan every evening, that we make sure we identify which markets we're looking at, the direction in which we're looking for those markets to move, and the price at which we want to engage. So, for starters, we don't get into trades like if we have a level of resistance, and this level here is a level of resistance, the 41.50 level, strong level of resistance. What we will never do is get in just below that level and anticipate that market to break higher. So that's just a basic rule. If you have a support and resistance, you want to buy above it and you want to sell below it, or look for selling opportunities below it. You don't want to do it the other way around. That's going to be very, very difficult to be consistently profitable doing that. So there's lots of little, not tricks, but there's lots of different things that can help you. And that's why, people who use indicators, if they make you feel a bit more confident about that decision making and allow you to be a little bit more consistent in your decision making, then fantastic. That is fine. Yeah, you're absolutely right. Mentality. Yeah, it's it can be tough. It can be a really tough environment, and there's certainly strategies that can be adopted to make it a bit easier. And we would certainly from a personal perspective, I would say that the markets used to be a lot easier to trade. Now they're a little bit more challenging, largely from a volatility perspective. So look, thanks very much for the chat. Absolutely my pleasure. Sorry there, Michael, I went off on a bit of a tangent a little bit, but hopefully you found it useful. Yeah, my pleasure. So look, let's have a look at these markets and see. So we're still looking for that high probability buy trade. It's actually above the 41.53 level. So we'll just correct that slightly. So the Nasdaq is an interesting one. because we had that pullback. In fact, it pulled back way below the 13,856 level. It literally bounced off the 13,790 level. So what we'd like to see, if we can, is just a bit of a corrective move back to this level, and then if it starts to fizzle out, then we can look to get that trade. But we've got the highs up here. We've got prices. Okay, it's quite a large range, but it is range bound still. So I tell you what we'll do. We will make a decision on that after this news event, if that's okay. Right, so let's go back to this this dollar trade. So we have a high probability buy trade above that 89 level. So up on screen you'll have HP for high probability. It's a buy trade, so you know which market, what direction it's going in, and the price at which certainly we will be looking to get involved with this trade. And we're looking at a double top, but it's far more important than just a double top. It's also a triple top over a longer period of time. So over the last month, we've bounced off this level, and the more times you see price bounce off a certain level, the more important that level of support and resistance becomes. So it's hopefully quite a straightforward trade. We're looking to buy this market, and in fact we should be buying it above the 120 actually, rather than the 11 pips lower. So let me just change that for you. So it's the 1.2 or the 120 level, so an important level, and prices might actually reverse lower from here, and if so, we can act accordingly. So we keep a close eye on it. Right, what I'll do is I'll turn on the squawk so we'll get some market updates. This thing moved again. Let's get rid of these. So all we put really is largely horizontal levels so that we can see if price is range bound, and it's really the breakout of those horizontal levels. The purple ones are a little bit closer to the current price action, and the only ones that we want to be sort of thinking about. So this is a daily high and a multi time frame high as well, just at that level. And this is the breakout of that 4-day range, the 1919 level. So that's quite important in its own right. So we'll see if we get that follow through in that trade or not. So there's a high probability buy trade. So the CAD, we're just bouncing off these lows, and we are now above the previous daily low. So
1 minute to go now. 1 minute.
So we're at this little level, basically at yesterday's low. So we've pulled right back off that level. We have our stop loss above actually the daily high. So from a technical perspective, we've got our stop loss in a, let's say, a preferable position, because you want this market to work really hard to get us out of that trade, and that's really what you're looking to do the vast majority of the time. So the 108.75, Yeah, so that's still pretty relevant.
Seconds.
Okay, so we've got this news out. It will be important to just keep an eye on the euro dollar and the S&P 500, see how this performs around that 41.53 level. And I'll get these up on screen.
Still waiting retail sales, but initial jobs claims at 576,000 with 9.8 for retail sales month to month. Ex autos at 8.4%. Initial jobs claims again at 567,000. Continued claims at 3.731 million. On New York Fed manufacturing at 26.3, and manufacturing sales out of Canada at minus 1.6%. Still waiting a release from the Philly Fed Business Index. To again repeat, that's the US retail sales numbers month to month, 9.8%, a beat on expected 5.9%. Power vision at minus 2.7%. With the ex autos reading month to month at 8.4%, again beating 5% expected, with a power vision of minus 2.5%. Moving to the initial jobless claims for the week, 576,000, lower than the expected 700,000. Power vision higher of 769,000. Continued jobs claims at 3.731 million. Power vision of 3.727 million. The New York Fed manufacturing reading 26.3. Was against the expected 19.5. Looking to Canada, manufacturing sales at minus 1.6% versus expected minus 1.
Okay, so as per expectations, really the retail sales figures in the US were huge. Let's say that these prices are largely built in, and now these prices are continuing to the upside. So
50.2 for the Philadelphia Fed Business Outlook. Can't pick, that's 50.2, beating the expected 41.5 reading for Philly Fed Business Outlook. On the breakdown, the employment index at 30.8, prices paid at 34.5, future index at 66.6, while new orders at 36.0, factor index at 50.2 for Philly Fed.
So we're just getting that move to the upside now for the S&P. So we can get in at this 41.50 level, 54, and stop loss 41.21.
Further release from Canada as ADP shows non-farm payroll employment for February revised to show an increase of 271,700. Was previously a gain of a loss of 100,800. Well, StatCan flash estimate showing Canadian March beer ship prices seen rising 1.6% on the month.
Okay, so sorry, just bear with me a second. I'm just looking at a couple of things offline.
There's comments here from US Secretary of State Blinken that the US can expand Russian debt sanctions as appropriate.
Okay, so
Just heads up, we are set for a regular reset of our audio servers. The player may show off error for the next 30 seconds or so, but should reconnect automatically.
right, these are such positive retail sales figures, and we've got a really potentially humongous number coming out of China. So all of that is just really quite positive for equity markets. So this is one where, yes, we got the technical moves higher, but we've also got a bit of a green light from the fundamentals. So, you know, this is a market that we just kind of want to get into. So, so we have a $30. $41, $41.21. So there's a little bit more uptick in this trade as well. So I'll explain exactly what we're doing now in just a minute.
Sometimes the reflection is far more present than the thing being reflected.
Sorry about this, guys. I'm just let me see.
In geopolitical news here, Chinese envoy to Iran talks need to do away with disruptions and pick up the pace of negotiations.
For me, sometimes the reflection is far more present than the thing being reflected.
I'm trying to take a trade offline and I'm having troubles getting into the trade. And I'm not too sure why I'm having issues with that. Okay, so we're looking to get into the S&P and also the so the S&P 500 above that level, and we've got a stop loss below a technical low down here, so we're not going too tight with it. We do want to give it the best part of 30 odd points, bit of a stop loss. We always trade these markets with a stop loss, of course. You know, we'd never get into a trade without placing that stop loss. So really positive retail sales figures. I'll just share that information with you again. We should have the core retail sales figures in as well. Yeah, sizable uptick. So really you're looking for deviation. So when you look at the news events, you have the forecast in the middle. You've got the previous monthly figures, and then you have the forecast, and it's the forecast what the markets pretty much price in to the current price. And then when you get a strong deviation like that, you might experience a small pullback like we're currently experiencing, but we would expect further upside, certainly across those equity markets. And the unemployment claims is much lower than anticipated, so really positive number with the number of people in the US applying for unemployment benefits. So, and the Philly Fed manufacturing figure is really positive. So all in all, a good news event for the dollar, which is very much expected. And so what does that mean for us? We're getting into a buy trade above the high. So we're getting in just above this high, and there's our stop loss, with some further upside expected. We're looking to get into the Nasdaq as well, around the 13,920 level. see what a price I've got on these. Yeah, so the 13,945 level to the upside. So just that at that high in there, with this price pushing to the upside. Okay, just having a couple of issues here, which is not great when you're online, but so we're getting into the upside in the Nasdaq a little bit later than what we would have liked, really, but going into that news event wasn't the best time. But the figures are so positive, it's worth keeping an eye on those. So we're in the S&P to the upside, we're in the Nasdaq to the upside, we're in some of the dollar weakness trades, which are likely to fall into place. You certainly want to get that the dollar's negatively correlated with the equities, so if they push higher, then we'd expect further moves to the upside. So the trades we're currently in are the dollar CAD to the downside and the Aussie dollar to the upside. So that was a really good pullback there to the 77.40 level, and now we're extending to the upside. So they may be a little bit slow in coming around, and we might get pullbacks, but really over the course of the next 24 hours, these are the trades that we would like to be in, and we're actively trading them with our own capital as well. So that's the S&P, the Nasdaq higher, the S&P higher. So we're in this risk-on market condition, and as a result, we can look for further dollar weakness, largely against the commodity currencies. So as the dollar goes down, the price of commodities can often go up because they become more affordable. So you look at gold, you're seeing prices just ticking to the upside. Crude oil, we haven't really seen the extension to the upside yet in crude oil, but we're probably likely to get that at some point. So just over the next 24 hours or so, we do want to be long the equities. We want to have this risk on aspect to these trades, and we want to be short the US dollar. I hope that makes a little bit of sense. We've got the dollar CAD to the downside. We've already got the Aussie dollar to the upside. We're just keeping an eye on the euro dollar. We're in quite a few of these markets on the daily time frames to the downside already, or to the dollar weakness already, and the Nasdaq as well. So these are our trades. You've got dollar CAD, Aussie dollar, and we've also got a Nasdaq to the upside and the S&P 500 to the upside. Okay, sorry, Michael, apologies about that, but could you tell me which moving average is which on your chart? Yes, so the ones that are of most value, not to us but to investors and your big hedge funds and your big financial institutions, are by far the 50 period moving average, which is often the closest line to the current price, because it takes the average over the last 50 days and it tells you what that average is. And that for us at the moment is the average range over the last 50 days in the euro dollar. Is the 1963. So we're just trading above the average price over the last 50 days. It should be the other way around actually. So what you find with an awful lot of these, the 200 period is often black, and the 100 period moving average is often kind of a dark blue color. So just to differentiate, so the closest color to the price is the 50 period, then we've got the 100 period moving average, and we've got the 200 period moving average. And just to clarify, they're only of major significance on the daily time frame and above. So using these moving averages on the smaller time frames, although lots of traders use them, they're not that reliable. But on the daily time frames they are, because prices react around those levels on many occasions, and it's all it does is add a little bit of future confidence in your decision making, and if you can include an indicator that will help you with that, then that's great. But we do trade price. We trade price and volume. We absolutely do, and all indicators do is just support us a little bit, and that's about it. Yeah, so that's for the euro dollar there, Michael. Yeah, you're hoping to make this your full-time job. Would certainly recommend you to do it once you've proven to yourself really that you can make consistent returns, because the vast majority of people are very much unable to do it, and it's largely down to them not knowing really what they're doing. And this is a specialist area. It's really an environment for those that have a certain temperament, like Finbar mentioned earlier, just a certain mentality. If you're someone that gets taken away with emotions, and if you hit 4 or 5 winning trades and you get excited and you start increasing your trade size and you start throwing money at the market, that's not a recipe for success. For us, whether we take a series of winning trades or losing trades, it's just about looking for that next high probability trade. And we don't get excited if we make loads of cash. We don't get too down if we take 4 or 5 back-to-back losing trades. It's part and parcel of trade in these markets, and we kind of view it as a business rather than as a hobby. And it depends, it really depends on the individual. We can certainly help traders that are interested in in trading, like perhaps yourself, as potentially as a full-time trader. It does take a little bit of time though, Michael, so do give yourself that space. Try to have some other forms of income to support you, before you make that transition, and try to have some cash in the bank, of course, as well. So yes, it's an aspiration many have. It's an aspiration that's very unrealistic for an awful lot of people out there. Look, if you want to speak to us in a bit more detail, you can do. You can contact us through our website. There's a chat function on there, and one of us will get back to you, normally pretty quickly. Yeah, the Nasdaq entry, Finbar, was the was just up at these highs in here. Let me get the exact price. Yeah, it's the 13,952, and it's a bit lower on the other one, the 13,945 on the other one. So that's our entry price, and we would just anticipate these markets to continue their move to the upside. Perhaps not straight away. We might get a corrective move first, but ultimately we'd expect these markets to push higher. I do apologize, guys. We do need to wrap this session up. So just to clarify, we're in the S&P and the Nasdaq to the upside. Just monitor how these trades will perform over the course of the trading session. We'll keep a close eye on the euro dollar. It's not really doing that much just yet. The dollar CAD is kind of pulling back off its lows, and the Aussie dollar was close to making new highs there just a moment ago. We'll see if the dollar yen continues its progress lower. So we'll see what opportunities we have. Yeah, no, that's fine, Finbar. No worries. So look, on that note, guys, we'll let you guys go. Thank you very much for joining us as always. For more information, do go to our website at thelivetraderoom.com. And if we could be of any help, we've got a whole range of products and services all available there for you to learn how to trade, if that's something you're interested in, all at very low cost as well. So we do pride ourselves on not exploiting people to any extent. So absolutely my pleasure, Michael. Feel free to join us again. We'll be back Monday at 12 noon. So if you're available and you'd like to join us, you're very welcome to. And like I said, if you need to speak to us about you trading, then we can absolutely no doubt help you. Planning your trades is a really, really important part of trading these markets. Not turning up at your trading screen and just picking things, but to actually plan for those moves, because then when the markets perform as per expectations, then that's what trading is, and that's what you'd expect to happen. So interesting. So look, I'll let you guys go. My pleasure. Have a great evening and rest of the afternoon, and we'll see you all next Monday. For everyone here, bye for now.